Welcome to PhillipCapital's Weekly Market Watch. Asia is out 60% while US is out 45% for its March lows. Is the rally sustainable? Let us find out from Mr. James Chua, investment analyst from PhillipCapital Management. So James, what are your views going forward?
Yeah, we are obviously more cautious on the equity markets right now, seeing how much the markets have run up. If we use history as a guide, we see that it is not uncommon for markets to rally 50% of its bear market lows within the first 6 to 12 months. And then if we ask ourselves the next question of what happens after that, once again, the picture is not so clear. In the November 29th and the December 1974 example, markets became range-bound. In the example of 1982, the markets actually continued to rally for many more months. So from a pure historical and returns angle, the picture is not clear. We tend to be more in the camp of being conservative and cautious. We would expect the markets to correct in the coming months. We do not expect it to correct below its March lows, but to retrace a significant portion of the run-up up to now.
What does your asset allocation for your portfolio look like?
Yeah, we've recently developed an 18-factor model that helps our portfolio managers with asset allocation. Starting about February in 2009, the model began to move the funds into more equities, and then by April 2009, the model had actually overweighted equities. If we look at the model as of Monday's close, we actually see the model still recommending an overweight in equities and also recommending investors to buy any dips in the equity market.
Investors' portfolio recently?
Yes, since we tend to look at things through a value contrarian lens, one of the markets which we've liked to focus on recently is actually Malaysia. In many respects, Malaysia has been a laggard in the recent equity run-up, and overall the Malaysian market has been neglected by investors. If we look at the allocation of fund managers to Malaysia in a lot of the Asian funds, a lot of them systematically underweight Malaysia. A lot of the reasons that is cited for having a pessimistic view is of course in PM Najib's administration and doubts regarding his ability to execute his economic policy. We think that the market currently underestimates the long-term potential of Malaysia. So over the last month or so, we've been looking at interesting sectors. We've been looking at particularly infrastructure, palm oil, and also we like timber.
That's all we have for today.